Ladies and gentlemen, good day and welcome to Sundram Fasteners 4Q results call hosted by Avendus Spark. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ram from Avendus Spark. Thank you, and over to you, sir.
Thanks, Aman. Good evening, everyone. I really appreciate you guys logging in. Very pleased to be hosting Mr. Dilip Kumar, CFO of Sundram Fasteners, and Mr. R. Ganesh of the corporate finance team. We'll start with opening remarks from Mr. Dilip and then follow it up with a Q&A as always. Mr. Dilip, would you like to start?
Yeah. Good evening to all. Welcome to this earnings call. And I appreciate the announcement made by the host. The information which is shared, please keep it in strict confidence, or if you are circulating any note to your clients, if you want to validate anything, please do not hesitate to reach out to me so that I'm not quoted out of context. So just want to give you a brief economic background, and the inflation continues to be sticky as we have seen, and the March numbers are high. But fortunately, RBI has not raised interest rates in its last meeting, so which is a good sign. And but the FOMC continues to raise interest rates, and the outlook does not look good. I think they will continue to raise rates for the rest of the year. There are conflicting reports. We are hearing that there has been increase. The unemployment rate has come down in the U.S. and the wage rates have grown, but people are talking about a potential slowdown recession, but we are not sure. The oil prices are low in India, the world over, and which augurs well. Rupee has shown a depreciating bias, but largely it's been stable between 81.5 to 82, which is good for a company like Sundram Fasteners, where we have nearly $200 million of exports. So with that as a background, the company has achieved twin milestones, or should I say 3 in fact, because we have crossed 5,000 crores of consolidated turnover. We have achieved a PAT of 500 crores for the first time, and we also declared the highest payout in the history of the company. The dividend was 8.63 rupees per share. The revenues have grown well from 4,198 crores to 4,949 crores, registering 18%. This growth has been broad-based across most of our divisions, and also across all verticals, all segments, be it commercial vehicles or passenger vehicles or stationary engines, tractors, all have done well for us. And even the export market, though in dollar terms we may have been flat as compared to FY22, but thanks to large rupee depreciation in the first 9 months and to little extent in Q4, we have benefited from the rupee's free fall. So overall we have finished at 4,949 crores. The profit before tax has come in at 615 crores, an increase of 11%, and profit after tax at 464 crores at a growth of 14%. Now, the raw material prices, where we experienced a few challenges this year. The prices went up steeply by 8,500 rupees per ton in the first quarter, and thereafter from 1st July, Q2, the raw prices dropped by 4,750. All of which had an impact in our results. And fortunately in Q4, the raw material prices have been soft, and which is reflecting in better gross margins. But going forward, there are expectations of a further price increase, but which we are not sure at this point of time, because this is a settlement which has to be reached between steel suppliers and OEMs. We are keeping our fingers crossed. As far as the other operating cost elements, they have been in line with the previous corresponding quarter or the previous quarters. There have been no major surprises, but barring one pleasant surprise, which is the freight outward, which has fallen sharply, which was as high as $11,000 per container in Q1, has now dropped to about $3,500 to $4,000, which is reflecting in our freight outwards a bit fallen. The other element is the power cost, which continues to be a challenge because most of our plants are located in Tamil Nadu, and 75% of our energy consumption is within Tamil Nadu. So, as many of you may know, which may have also discussed in earlier calls, the government has given a 5-year plan, and they have revised these prices, tariff, after a gap of 9 or 10 years. So, going forward, there is going to be a year-on-year increase. Just to give you a flavor, what was 6 rupees 33 paisa per unit has moved to 6.75 last year, and with the surcharge and the peak hour utilization, the weighted average rate is actually 7.19, which is slated to go up to 7.57 per unit this year. So what the company is doing, you may wonder. So we are trying to invest and more into group captive power policy of the government of Tamil Nadu, whereby we buy from private power producers either solar power or wind power or blended power. So we hope to keep our costs under control, not at the tangent-co price, the discount price, but we hope to keep this much lower. Also, with more and more tie-up of wind energy and solar energy, this will also bring in more green energy into our mix, which addresses from ESG perspective also. So these are the two elements which I want to touch upon as far as variable cost is concerned. The contribution for the quarter as well as for the period, for the entire year, is hovering around 25%. The next major element is the employee cost. Traditionally, Sundram Fasteners has kept it below 7%, which is a good metric to achieve, in line with probably our peers in the auto component industry. And the fixed cost, apart from salary cost, all other cost elements are fairly stable, around 8.5%. So the EBITDA for the quarter has come in at 16.2 and entire year at 16.1%. Now, there has been a steep increase in our borrowing cost, while borrowing by itself have fallen a bit. Our debt-equity ratio is only 0.15. At the group level, we are at 0.23. And as you know, there have been repeated hikes in interest rates in India, and what was available money at 2.5% to 3% for a good company, from packing credit perspective, now has almost doubled. And RBI also has tweaked the subvention rate available for export finance. And in parallel, FOMC also raised dollar interest rates. So we have a small ECB book. So the interest rates, interest cost has gone up. The company has spent about close to 300 crores on capital expenditure, largely on plant and machinery. Most of them have got capitalized in Q3, Q4. So the depreciation impact has not been steep. The effective tax rate has dropped marginally because we had some income tax refunds and which is already provided for completely. So we had the benefit of, we could take some of those credits in our tax element, in our tax cost. And overall, the net profit after tax for the quarter was 116 crores compared to 71 crores. But the 71 crores had an extraordinary exceptional cost last year, which was an impairment provision which we had taken based on the underperformance of one of our subsidiaries. And I'm happy to report in this context that subsidiary is also turned around, the UK subsidiary, and it has come into black. And the profit for the year at 464 crores at 9.7%. Just give me a moment, please. Sorry. The subsidiaries also have done well. The Upasana, our domestic subsidiary, had a reasonably good Q4 compared to the first 3 quarters, where more sales come from a Hosur factory, where the value addition tends to be high because of the critical parts, engine parts and brake components which we supply. Our IT arm, TVS Next, has also performed well and managed to reduce some outsourcing costs, though the bench costs have gone up, and it has also done well. I'm happy to report that Cramlington Precision Forge, our UK subsidiary, has done exceedingly well. From a loss position, it has turned around because the customers, it has been because of many things. The customer mix has changed, and where we are selling more to a customer where margins are high or material content is low. We've also managed to get compensation from our customers for the RM price increase. We have ensured sufficient machine availability, so there have been savings in logistics cost and other subcontracting costs where material used to move out. So we are able to send out in reasonable batches. And so you are seeing the benefit of all this in the performance of Cramlington Precision Forge. The Chinese subsidiary, which had a difficult year and continues to make profits, but the first quarter performance has been encouraging, current year's performance. It had a subdued year last year, and in line with the issues there, the economy was slowing down. They had COVID, they had extreme weather conditions, so there are many challenges. So I think economy is coming out of this, and we will see hopefully a good number in Q1. So otherwise, I think it has been a very good year for Sundram Fasteners, both in terms of the year performance as well as the quarter. And we are delighted to report, like I said, more than 5,700 crores of turnover and 500 crores of profit, with the highest dividend payout in the history of the company. So with this opening remarks, I would throw the floor open to the participants ask their questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask a question may please press star and 1. The first question is from the line of Ram. Please go ahead.
Hi, I thought I'll go first while the queue assembles. I'll let the other participants ask the more interesting questions on EVs, etc. My question, Mr. Philip, is rather elementary.
Ram, I request you to please use the handset. There's some disturbance.
Yeah, is it better now?
No, disturbance still there?
I'm using the handset now. This has to be better.
Yes.
Yeah, my question is rather basic, sir. It's on CapEx. The company has incurred significant CapEx over the last 5 years in the standalone operations. I think we've spent cumulatively more than close to 1,000 crores. Could you give a very broad breakdown of the product categories or the segment this CapEx has been spent on? That's number one. And number two, I'd also like to know the guidance for CapEx over the next 2-3 years.
Yeah. So actually, we took a pause after the initial 1,000 crores or we spent the last cycle, then FY20, 21 and 22, last 3 years have been muted, but we have resumed in FY23, and we said in the last AGM we would spend about 1,000 crores, and we have spent about 300 crores this year. And we are likely to spend the targeted 1,000 crores in the next couple of years. That is a balance 700 crores. And these, in line with our revenue growth, these have been broad-based across our fastener division, our engine components business, our powder metal business, hot forging. We have spent across all our verticals. And also wind energy, most importantly, and the expansion is most likely to happen more in the next couple of years in wind energy and in our hot forging vertical, where we are, as you know, we came up with a press release some time back. We announced a $250 million order for e-axle sub-assemblies, and the CapExes are likely to be in the wind energy space and the electric vehicle space.
All right, thanks for that.
Thank you.
Thank you. The next question is on the line of Vimal Gohil from Alchemy Capital Management. Please go ahead.
Yeah, thank you for the opportunity, sir. I hope I'm audible.
Yeah.
Thank you. Sir, just wanted to get a sense on the performance for Q4 versus the production. Now, if I were to observe, M&HCV this quarter has grown at 18%. Cars have grown, or rather passenger vehicles have grown in excess of 15-20%. Two-wheelers have been weak. Now, in light of that, a 9% growth in standalone or domestic division seems to be a bit weak. That is one. Even in exports, if I were to look at on a YOY basis, the dollar, as you rightly pointed out, the dollar has depreciated by close to double digits. So over there also, a mid-single digit kind of a growth seems to be a slightly subpar. So are we missing something here? How structural is it? How can we sort of improve this going forward? Would be question number one. Thanks.
Yeah. So on the dollar, like I said, we set out to achieve about $200 million, and we probably ended with around $185 million. And the whatever growth in rupee terms you have seen is largely come from the rupee weakness. So it moderated a bit in Q4, the rupee weakness, but largely it moved from between 74 and 75 levels as at the beginning of the year to 82.18, if I remember, and it was around 82.5 at the end of Q3. Yeah, you're right about the export performance. As far as the domestic is concerned, if I look at not look at the quarter by quarter, but if I see the entire year, we were running the data, and in terms of the components where we participate, the growth of the industry has been around 23%, and whereas Sundram Fasteners has reported 26%. But there may be some yo-yoing between quarters, depends on the customer pool, the products in which we participate. But if I look at the entire year, the data points suggest that we have grown higher than the industry.
So for this particular quarter, the reason for underperformance could be some platforms that we were catering to. Maybe the production was lower this quarter. Could that be the reason?
That would be the main reason.
We've not lost any share, right?
No, we have not lost the share. In fact, our share of business in the platforms or the products we participate tends to be fairly high.
Understood. All right. Sir, could you comment on exports? What's the outlook in volume terms? We've sort of had a decline in Q4, it seems, from your commentary. But what does it look like for FY24?
FY24?
Yeah.
For FY24, with the new platform and the EV participation, it looks strong. But given the recessionary trend both in Europe and America, we see a sort of lull in the current quarter, April to June, and going forward it should pick up. That is what the indication that we have.
Right. So the growth could be back-ended in FY24. Is that?
Not only in the export market, even in the domestic market, the growth could be a bit back-ended.
Understood, sir. Understood. And sir, lastly, if I can just slip in one more. One of your competitors, Sona BLW, has got into shafts and that to cold forged parts. So, in light of increasing competition there, how do we place ourselves with customers? If you can just give us some comment.
The Sona is also into e-axle and differential case assembly. We are also into differential case assembly. So I think the scope is huge and wide, and the components or the parts we are talking about are very highly critical parts. So once the customer validates, this is not about the competition where somebody dropping a price by a few cents and taking the business. This may be true to some extent in a commoditized product such as Fasteners. But in hot forging business where the validation has happened meticulously over a long period of time, and the validation itself will take a long time and costs quite a bit. So therefore, another competitor or Sona coming in, or we getting into differential assembly will not make a difference to either of our positions.
Understood, sir. I'll get back in the queue for further questions.
Okay.
Thank you so much.
Thank you. The next question is from the line of Dipen Sangvi from Innam Asset Management. Please go ahead.
Yeah, hi. Am I audible?
Yes, sir.
Yeah.
Please go ahead, sir.
So your line is unmuted. Request you to please proceed with the question.
Yeah. Can you hear me?
We can hear you.
Yeah, okay. Thank you. So, sir, in our previous interaction, you had mentioned some time ago, I think last quarter, that there was some under-recovery in the raw material, and you had indicated that a large part of that under-recovery could be taken care in Q4. So has that happened? Is there any further under-recovery left in the raw material?
Yeah, so for the quarter, the recovery has been very, very good. We have almost recovered most of it. But if I take the entire year, there is a gap. And this will continue to be there because our contracts do not provide, especially in the export business, do not provide for 100% recovery. Also, in the domestic businesses also, such as in the wind space and the aftermarket, which is 10% of our business, the price increases can only be prospective because we are dealing with dealers, and which is the most consumer-facing business. So this recovery tends to be there, and it has narrowed down in Q4, but the gap will be there.
Okay. So secondly, on the exports, when you highlighted that there are near-term, this quarter is likely to be a little sluggish, but you are expecting the growth to be back-ended. So as compared to $185 million exports that we've achieved in FY23, If you were to put any number, at the moment, what kind of number would you indicate for FY24?
I think we will be looking at say 190 to 195 million dollars for the current year. That's our estimate.
So not more than 5% type of growth for the year, right?
Yeah.
Okay.
In dollar terms. In dollar terms.
Yeah, sure, in dollar terms. So because, we are unlikely to, probably not likely to see the kind of INR depreciation that we've seen in FY23. So your overall reported export revenues in rupee terms this year probably, likely to be a single digit growth or sub 10% growth. So, this is where, we have always been, quite bullish on, and I'm now talking of, beyond a couple of quarters or 1 year, as a directionally, you've always spoken of a very strong potential of, growth in exports. So, despite the order of EV, the execution of the EV order and on some new platforms, if you are indicating only 5% type of constant currency growth, are there other segments where do you see some kind of stress or decline in, some orders?
No, we are not seeing any decline in orders.
Okay.
The efforts are on, and we also want to achieve profitable growth. So this process takes time, and this EV order execution will start happening from next year and peak the year after.
Okay.
So you will see a good shift in our constant currency terms, the dollar sales. Yeah, but right now, taking into account the possible slowdown in the US, this is what we expect in dollar terms. But we are not losing any share with our customers, or we are not, we are not apprehending any such thing.
Sure. And lastly, we had in our standalone business, we had been operating at about 17 to 18% EBITDA margin, till except for last few quarters, where we've been hit by RM cost and other various other costs. So, you had kind of indicated that margins will go back to that level, with a pause and with some kind of lag. Are you still maintaining that view that margin can go back to closer to the 18% level towards the second half of FY24? Or is there likely to be a little more delay?
At the EBITDA level, we are at 16.1%.
Yeah.
We would be happy to achieve around 17% this year.
Okay, 17%. So despite the freight cost and various other costs coming down, as you highlighted earlier, and the raw material under recovery, largely been behind, we are still not expecting the margin to cross 17%. That is what is my understanding, correct?
Just to give you a perspective, if I eliminate the inflation, I am probably at 20 or 21%. If taking into account my recovery and what I consider to the RM supplier, but unfortunately, we cannot compute results in that manner, and therefore factoring in the inflation in the revenues and the RM cost, we are at 16.1, and given that the measures we are taking to contain energy costs and the sharp fall in the freight outward, and as more and more value-added products we sell, and in the standalone, especially the EV sub-assemblies, we expect the margin to improve.
Okay, sure. And sorry, one more question, if I may. On the overall subsidiaries, the Chinese subsidiary had a very tough last year, and you had indicated that now things are getting back to normalcy. So what kind of growth, all subsidiaries put together, or maybe specifically for Chinese subsidiaries, if you can highlight, are we likely to see in the current, in the FY24 financial year? And, are you likely to see margin expansion on the overall subsidiaries level this time as well?
Yeah, so we are likely to see growth in our Chinese subsidiary, both in terms of revenue and in terms of margins. Because last year, the raw material prices were very high, and the availability of resources were a challenge because the last quarter of Q4, they relaxed the COVID. So there were many challenges which was beyond the control of the company. But right now, the prices are softening a bit. We've also penetrated more with Chinese customers, It has its pluses and minuses, but we are happy not depending on only multinational customers there. And we are seeing that margins are having an uptick going by the first quarter performance.
Okay, sure. Thank you. I'll get back in the queue.
Thank you.
Thank you. The next question is from the line of Vimal Gohil from Alchemy Capital. Please go ahead.
Yeah, thank you, sir. Sir, just one clarification on the comment you made on domestic growth. While exports is understood that we have a large order and that will sort of start peaking in the end of the year. But within domestic, why are we expecting the growth to be back-ended? Because if we were to hear the production schedules and etc., the growth seems to be fairly okay.
What I'm saying is that the plans which we had set out to achieve, and we expect overall for the year good growth in the domestic also, but we expect because we've had a good March, and therefore we think that first quarter may be a bit of a slowdown, and because as the government spends more on the infrastructure and the vehicle scrapping policy kicks in, and being an election year, so we expect the Q2 and Q3 to be much stronger than Q1. So that is the context. It's not that we will have a slowdown or we expect things to be only rear-ended, meaning we will have a strong Q3 or Q4. Right now, our sense is that the Q2 and Q3 will be far stronger than Q1. I hope I put it in the correct perspective.
Right. If I understood you correctly, sir, maybe some of the newer projects that you receive would take some time to ramp up.
Absolutely.
And earlier expected.
In the wind energy space, we expect the uptick to start happening from October. So projects are in various stages. So we were saying more from that context.
Understood, sir. Understood. Thank you so much.
Thank you.
Thank you. The next question is from the line of Senthil Manikandan from iThought PMS. Please go ahead.
Hi, sir. First, congrats on the achieving a milestone of 5,000 crores on top line. Just a couple of questions from my side. First is just continuing from the last question on the wind energy. So you have been on the earlier interactions, you have been saying about the expanding the capacity. So any update on that?
Yeah, so the capacity expansion has started happening. And like I was explaining to the previous question, we expect the project to be fully operational and get the benefit of the capital expenditure from overlapping between September and October, Q2 and Q3.
Okay. And on demand side, particularly for the wind segment, how do you see it for the next year?
The next year looks quite strong. Even the year after that looks quite strong. And like we've been saying, we are, based on the project which we are executing, we are hopeful of further expansion in the wind energy space.
Okay, sir. Second question is, so broadly, what would be the company's medium-term aspiration over the next 3-5 years on the revenue diversification on the margin side?
Can you repeat that question, companies?
So broadly, over the next 2 to 3 years, if you can share some medium-term aspiration of the company.
So the growth in terms of revenue, like we've been saying consistently, we will outbeat the industry by 2 to 3%. Like we have seen even this year, the industry has grown by 23% in the products, the spaces where we participate. We have grown by 26%. So that is the broad guidance at the revenue level. So the middle line, which is where the bulk of the costs are accounted by RM, which is not entirely under our control, and we can keep our fixed costs constant. So therefore, to answer your question on margin, we are hopeful that we'll be able to move from 16 to 17%, factoring in the growth planned this year. And for it to breach or come back to 19 or 20 levels will depend on the RM inflation dropping further.
Okay, thanks.
Thank you.
Thank you. The next question is from the line of Sonal Gupta from HSBC Mutual Fund. Please go ahead.
Hi, good evening, sir, and thanks for taking my question. Just coming back to the domestic business, I mean, like, if I look at the standalone quarterly numbers, right, broadly, we've been more flattish. I'm just trying to understand, like, Q4 was an extremely strong quarter for the industry. If you look at sequentially, I mean, double-digit growth in PVs, tractors, CVs, everything. So, and we don't really have much exposure to two-wheelers. So I'm just trying to understand that. And last year's base was also not very high. So just trying to understand why it seems that the domestic is sort of been very slow in Q4.
No, I think for us the last year, if you see, we had done about 750 crores Q4. And we have moved to 820 crores. So it's not that the base has not been high. The base has been fairly high from our perspective. Yeah, so like we explained in the earlier part of the call, in the platforms where we participate, our share of business is very high, and which is what reflects in the quarterly numbers. So if segments where we are not participating or platforms we are not part have grown, to that extent, it will reflect in the quarterly revenues.
Okay. And sir, could you give us, as you usually do for the full year, maybe the breakup of sales mix in PV, CVs for, I mean, like domestic, tractors, industrials, aftermarket?
Yes, sir, sure.
Yeah, I think with respect to the industrial segment-based breakup, I think cars and utility vehicle accounts for roughly about 40% for us in the domestic standalone business. And with respect to the commercial vehicle, LCV and the engine, it would be in the range of about 25%. And tractors would constitute about 10%. The balance would be represented by the industrial segment where we service the aftermarket requirement, and roughly about 5% from the wind energy fasteners, and the radiator cap would account for 3%. This is the broad industry-wide segment.
So this is just domestic, right? Like
domestic. And
domestic sales.
In terms of exports, if you look at predominantly the presence is between CVs and cars and multi-utility vehicles. Those are the broad segments where we participate.
So we would, how much would be industrial exports for us?
The industrial exports is minimal. When I meant industrial sales, it is through the aftermarket within India, where we service multiple industries.
In the export market, between commercial vehicles and passenger vehicles, they account for 80% of our business, sir. There will be balance probably in the aftermarket, but not in industrials.
So balance would be aftermarket. So you will say that industrials is very low, right? Like earlier we've sort of shared that I think our industrial revenues last year were around, maybe less than 100 crores. So has that on the export side, would that have improved a lot?
No, industrial side, our presence is only in the domestic market, that is within India. In the export side, our presence is predominantly in the cars and CV segment, which would account for 80%. Tractors, say, around 5%, and the rest of it goes to off-road vehicles, stationary engines.
Got it. So as of now, you're saying that because the wind energy project, I thought that wind was a meaningful portion, something meaningful even last year, right?
No, it will catch up during the current year. Already we are servicing the wind energy market requirement that is predominantly within India. So once the project is on stream starting from Q2 of the current year, we should see a good pickup in the export revenue for wind energy.
Okay, got it. So sorry if I'm wrong, but I'm just because I have something like 5% of last year's exports was wind energy related. So that was for FY22. I mean, would we have something in that ballpark, or it's not? That's an incorrect number that I've noted.
No, 5% is the overall wind energy exposure of Sundram Fasteners. It's not
okay.
Exports.
Got it. And between, I mean, like just trying to understand your guidance on the export side, which I understand is conservative. You're building in some sort of a U.S. recession or slowdown. So from that perspective, I mean, like what sort of underlying market decline or core business decline are you building in?
We are not building any decline. We are working based on the customer schedule or requirements. The indication for us is, yes, the Class 8 trucks would be doing in the range of higher single digit. So that addresses the CV segment. And cars and multi-utility vehicle, we are performing based on the lines of customers' requirement.
Got it, sir. Got it. And just on the EV export orders, I mean, like you said, you expected to peak or reach the peak revenue potential by FY25. Is that correct?
Yeah.
So and that's a large order, right? Like 300-400 crores of annualized run rate, right?
Yes.
So by FY25, you expect to hit that run rate?
Yeah, between FY25 and 26, yeah. Around that 12-month period, it should peak.
Got it. But 24 would be fairly slow, right? It's not much revenues on that.
No, it's a 6-year program, and we expect the things to peak between second to fourth year with a peak volume of $52 million, either in 25 or 26.
Got it, sir. Great, sir. Thanks for taking my question. Thank you so much.
Thank you. The next question is from the line of Prolin Nandu from Goldfish Capital. Please go ahead.
Yeah, hi. Thanks a lot, sir, for taking my question. And sorry to repeat few questions, but to get more clarity, first on the domestic side of it, right? I mean, you mentioned that there might be some growth in the platforms in which we are not present. So I'm just wondering whether is there a very high concentration of these platforms in our in our sales revenue, that in case if one platform does well, it affects our overall revenue. So is there a very high concentration there, and how do we diversify within getting into different platforms?
Now, see, with respect to our participation, we are there in all the segments, whether it is M&HCV, CV, or LCV, cars and multi-utility, tractors, engines. So our participation is widespread.
Sure. So, I mean, yeah, but then, I mean, let's say, for example, in Q4, what you are saying is that maybe in some of the platforms where we are present, that did not do well, and that is the reason why we are growing lower than the industry level, right? Am I correct?
Yeah, so that was with reference to one of the data points which was pointed out. Somebody had said Q4 market has grown much higher than our performance. So we have to validate that. But if that was the case, I have data point for the entire year. If that was the case, yeah, sometimes these things happen where the platforms we participate, there is no growth, and therefore our sales tends to be moderate or flat in that quarter. That was the context.
Right. Okay, understood. So, I mean, is there a number where, let's say, for example, any one platform would be contributing around 5% of our revenue, or that's a too large number to probably work with?
See, we don't have concentration of revenue coming from a particular platform, so it's very difficult to quantify.
All right. No worries, sir. Again, the second part of the question would be on your guidance for FY24 on the export market. And I mean, in the previous question, you answered that you have assumed an high single-digit kind of a growth for Class 8 trucks, and that's broadly the number that you have also given us for the next year's export in constant currency basis. So I would have thought that maybe Class 8 truck would be the most volatile part of it. I mean, is this not a very, very conservative kind of a guidance? Because, and also to add to that, is there no scope to gain market share irrespective of however the market is growing? Are there not any, couple of basis points which you can gain in terms of market share over and above the industry growth in the export market?
Yeah, so a couple of things. So market share, gaining market share, it's not easy. Like I said, especially if it is a critical component, the OEMs are not comfortable replacing. In that sense, virtually there is no competition. For instance, the $250 million program which we have won, it is if some other supplier, whether in India or some other part of the world, offers a better price, the OEM will not change the source. So they are continuing to buy only from Sundram Fasteners. So it is cast in stone in that perspective, from that perspective. But you are right about we've been a bit conservative in our guidance on growth in dollar terms, but we'll be happy to report more optimistic scenario in our Q1 call.
Right. Great. That is great. Good to know. And the last question would be, you mentioned that, there are this EV order that you have won that takes a lot of time in terms of validation. So are there, at this point of time, are we going through a lot of RFQs and validation, and are we expected to probably win some of these orders in which we are going through this validation? Can you just help us understand as to what is this whole, the current levels of RFQs and validation that we are going through right now?
It's a continuous process, sir. So we have subsequently won small orders also in the EV space, while not been very big to the extent what we announced earlier. So there are small wins with the customers, and the RFQs and evaluation of new opportunities is a continuing exercise by the marketing in the areas where it fits into our growth strategy. And like I said, we also want to have a profitable growth. So we are not there merely for market share, and so the return ratios also should get met. So keeping all this into account, yes, the RFQ pipeline is strong.
Sure. And what could be the historical conversion rate that, we will be having for these RFQs?
With respect to the RFQ conversion, the number could be in the range of double digit with respect to, say, if I'm handling 50 RFQ, it would amount to 25 to 30% with respect to hit ratio. That has been our experience.
Sure, sir. Sure. And last question would be on this wind energy capex that you are undergoing right now. Now, when we talk to other players, we are hearing a slightly contrary view that maybe this wind energy turbines capex is probably slowing down, or the demand is not as strong as what it was expected. Are we hearing anything from our customer about any slowdown, or this is in line or on time in terms of whatever we had planned in terms of execution timeline?
Yeah, we are on course in terms of our execution timeline and our revenue plan for the year. We have not heard anything to the contrary.
All right, sir. That's it from my side. Thanks a lot and all the best.
Thank you. The next question is on the line of Rahul Ranade from Goldman Sachs Asset Management. Please go ahead.
Yeah. Hi, sir. Thanks for the opportunity. Just a clarification. So, what would be our revenue from non-auto in the standalone? So last year, the revenue that we had called out was 500 odd crores. So, what would be the number for this full year?
So, roughly our non-auto business is about 1/3 of our standalone revenues.
1/3 of the standalone revenue.
Yeah. This comprises of wind energy, then aftermarket, our tractor business,
Okay. No, no. So tractors would be how much of this?
Ladies and gentlemen, thank you for patiently waiting. The management line has been disconnected. We request all participants to remain connected while we reconnect them. Thank you. Ladies and gentlemen, thank you for patiently waiting. We have the management line reconnected. So over to you.
Yeah.
The current participant has dropped off from the queue. Hence, we will move to our next question, which is from the line of Sahil Sanghvi from Monarch Network. Please go ahead.
Yeah, am I audible?
Sahil, your line is unmuted. Yes, please go ahead.
Am I audible?
You're audible.
Yes, yes. Thank you for the opportunity and congratulations, sir, for the improved performance. My first question is regarding on the cost front, as we are seeing steel prices moderating domestically also and in the foreign markets. Can we expect the prices to stay at that place and hence a bit of margin expansion, or the price pass-ons will happen immediately?
The RM prices have been soft or constant in Q4, but there are expectations that there may be one more round of hike. This is our understanding, but we are keeping our fingers crossed. But if it were to happen, it is generally instantaneous in terms of pass-through. There may be a 1 month lag, may spill over to Q2, but most of it happens within the quarter.
Right, sir. Right, sir. And are you seeing the trends of correction in the RM cost further?
No, not really. Like I said, the steel mills have sounded out a price increase, but it has not been agreed by the OEMs. The Q4 was a quite silent quarter, but there are once again whispers and noises about price hike.
Got it, sir. Second question is regarding the wind energy business that we have, sir. Supposedly, roughly, it's 5% of our total revenue, which is, roughly it is around, say, 280, 270, 280 crores. Correct me if I'm wrong, but so what could this number scale to in, say, FY24 or, say, 25? What kind of visibility do we have on the wind energy side, if you can throw some numbers to us?
Yeah. So currently, we are around 200 crores. We expect that to go to, let us say, from in a 12-month period from September 2023 to August of next year, in that cycle, to go up another 80 to 100 crores.
80 to 100 crores, it should grow.
Yes, yes.
And that should peak out, or then it depends on how things evolve after that?
Yeah, we can say it's kind of locked in. Yeah.
Okay. Got it, sir. And thirdly, do we get any kind of once in a year kind of a price hikes from our export orders, or that has already happened? Is it in Q4 usually?
No, there are no price hikes separately. So if there is a compensation request to the customer can be made for freight, the rate has also fallen. And if raw material prices go up, we may go back to them for a price increase. But otherwise, there are no price increases.
Got it, sir. Got it.
Yeah.
Got it, sir. Thank you so much and all the best, sir.
Thank you. Yeah.
Thank you. The next question is from the line of Rahul Ranade from Goldman Sachs Asset Management. Please go ahead.
Yeah, thanks for the opportunity. I think I got dropped off. So you were explaining in terms of the non-auto piece of the standalone.
So like I said, it's 1/3 of our revenues currently, and the management has plans, aspiration to take that to 50% to mitigate the cyclicality of the domestic commercial vehicles and passenger vehicles industry. So currently, it stays at 1/3.
Okay. And does this also include some aftermarket also? Because I think the last time, the same split was given as to be 10% is aftermarket of the standalone revenues.
Yeah. In the aftermarket, which is for our business about 600 crores, about 300 crores in the industrial segment.
Okay. Yeah. And non-auto includes tractors, and in the earlier, kind of remark where you mentioned that tractor is around 10% of the domestic, right? So, Okay. So tractor would be then, 10% of some 3,200 odd. So 320 odd crores would be tractors out of this.
Yeah.
Okay. So out of the 1,600 odd crores, or, one third of the standalone 1,600 odd crores, 300 crores is from tractors, and the rest around 1,200 odd crores is the non-auto, non-tractor.
So currently you take it as 450 crores of tractors and 350 crores of industry.
Okay.
For FY23. Between these two, you get 800. Then the stationary engines, infrastructure, wind energy, off-road vehicles will account for the balance 400 to 500 crores.
Got it.
Yeah.
No, this is very helpful. Thank you.
Yeah.
Thank you. Yes. The next question is from the line of Karan Sharma from Credent. Please go ahead.
Hello, am I audible?
Yes, Karan, please go ahead with your question.
Yes, sir. So I was going to ask you regarding specifically with respect to fasteners in the global market.
Can you use the handset, please?
Yes, sorry. Hello. Yes, sir. With respect to fasteners specifically, can you tell us the total size that is there in the global market in the automotive and the non-automotive segment?
Please repeat the question.
So fastener industry?
Yeah, so specifically with respect to fasteners, can you tell us the the total market size that is there in the global markets and related to the automotive and the industrial segment?
Yeah, I think the fasteners segment on a global side, it would include whatever from your apart from nuts and bolts, it would also include very many categories, but we are more focused on the height and sail fasteners.
And so what would be the size of that?
Definition.
So what would be the size of that part, height and sail fasteners, globally on a global scale?
Probably we need to validate it.
Okay, sir, sure. Thank you.
Thank you. Ladies and gentlemen, we'll take the last question. That is from the line of Dipen Sangvi from Inam Asset Management. Please go ahead.
Yeah, thank you again, sir. Just a clarification. When you mentioned when you guided for a 5%, so around $195 million export for FY24 in US dollar terms, does that include the contribution from the EV order of year one?
Yes, sir, it includes. It includes the businesses, all our businesses.
Okay. And approximately what kind of number that be? You said peak revenue will be from year two, which is about $50 million or thereabout.
Yeah.
Year one would be a much smaller number?
Maybe less than $5 million this year.
Oh, less than 5 million. Okay.
Yeah.
So that means that, that 5 going to 50 from year 2, which is FY25, and the usual growth, hopefully in the normal, in the rest of the export business, that means FY25 should see a significant jump in your overall export revenue, right?
25 and 26 also you will see a peaking. 25 it will accelerate and 25 it will peak.
Okay, got it. Thank you so much for the clarification.
Thank you, sir.
Thank you, ladies and gentlemen. That would be our last question for today. I now hand the conference over to the management for their closing remarks. Thank you, and over to you.
Hello.
Yes, sir. Over to you for any closing remarks, sir.
Nothing specific. I think we have answered, set the context in the beginning to the results, and we have taken the questions. There are no specific closing remarks from my side.
All right. Thank you very much. Ladies and gentlemen, thank you. Ladies and gentlemen, on behalf of Avendus Spark, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.